How to keep ownership in your venture company. Disclaimer, it's not legal or investment advice. Seek competent advice from qualified attorneys. Your situation may vary. The more you know, the more you can profit. Now, a recent article on venture fundraising studied dilution experienced by founders. The study showed that VC funding greatly dilutes the owners. Tech founders could drop to less than 10% equity ownership after 50 to 89 million in funding. The results for biotech and medical research ventures were even worse. Besides dilution, venture capitalists often insist on control. Founders can be saddled with piles of restricted agreements. Investors may have prior right to receive money when the company is sold. This means that your share may be figured after the VC gets his money back, greatly reducing your profits. Venture capitalists may want anti-dilution agreements such as the notorious full ratchet provision. Pro-rata rights give the investor the right to invest in future funding at a level that will maintain its level of ownership and not experience dilution. Drag-along provisions can require founders to sell even when the terms are adverse to the founders. Rights of first refusal require founders to first offer their shares to the venture investors when they want to sell. Tag-along provisions give the investors the right to sell their stock to buyers found by you, the founder. Venture capitalists may insist on control. I have seen venture capitalists who control the board of directors fire the founder without good cause. The venture capitalists simply believed they were smarter than the founders. History proved these venture capitalists wrong, as the company usually tanks under their control. How can you raise money and avoid these issues? Simple. For example, on a Reg A plus IPO, you can keep control and sell stock at public market prices. You sell stock at whatever the public thinks it's worth. No restrictive agreements are needed. Find out more about protecting your equity. You may be surprised to discover that a private offering to accredited investors is best for you. Or you may find that you can profit even more from the new Reg A plus IPO. Do you want to keep control? If so, let's roll. I see a time, say a year from now, after we finance your fast reverse merger or IPO, when you're building your dream with that war chest of money, and we can look back on this as having been the start of you achieving what is important to you. Isn't that what you really want? Now, I do not know if you want me to do a reverse merger so you can get public fast, or you want a full IPO. But either way, it is easy to understand that these can add huge value to your company and securities. Isn't that what you really want? I look forward to talking with you. If you have questions, email me john.lux@securities-law.info. john.lux@securities-law.info. Phone number 202-780-1000. You can get my book on the Reg A Plus offering on Amazon. Or just give me a call, 282-780-1000.